Welcome to Market Analyzers. Today Nifty fell by 5 points and closed at 19,406, whereas Bank Nifty rallied by 118 points and closed at 43,737. If we compare today's closing with yesterday's closing, Nifty fell by just 5 points, which is very negligible. But buy on dips was seen in intraday today. Buy on dips means buying when Nifty corrects slightly downside. So it indicates strength in Nifty, and Nifty's closing is also done at day's high. If we talk about Nifty levels, support I am looking is at 19,250. It is an important price action support level, and Bollinger Band middle line is also present at 19,250, and resistance is present at 19,490. At same level of 19,490, Fibonacci 61.8% retracement level is also present. So above 19,490 invalidates recent price fall according to Fibonacci, and above that 19,620 is a major resistance. It is the level above which I will be bullish on Nifty, but at present the environment is very positive, so I even don't want to be bearish either. It is a wait and watch for me. There is not much happening globally to discuss. Crude oil is present at $85 per barrel mark. Bond yield slightly moved higher yesterday, but it did not bother US markets. There are no major global events until 14th November. On 14th November, USA inflation data will be updated for October month. The expectations are 3.7%, below that positive, above that negative for markets. If we talk about FI's data, they are still surprisingly selling in cash segment. It means they are selling their holdings. They sold for 550 crores worth yesterday, but in futures they turned positive. They are net long of 770 crores worth of futures on Monday. They still carry 1.47 lakh short contracts. On last Thursday, they had 1.75 lakh short contracts in index futures. On 6th November, which is yesterday, they reduced it to 1.47 lakh. So they are buying futures. Even in options, similar trend can be seen. On Monday, call ratings was at 9,900 contracts. Call selling means bearish view. Total net calls sold was 9,900 contracts, whereas puts sold was at 1 lakh contracts. Put selling means bullish. Put selling is very high versus call selling. They are still selling in cash segment, but they are parallelly on positive side in both future and options. To get even more clarity on FI's fund flow, we need to track these 3 points which we discussed. First point is the cash numbers. If they are net positive means it is bullish regarding FIs, or else they should at least reduce their selling quantity in cash segment, and similarly we should track their F&O positions, on which side they are building their positions. On some rare occasions, they will be selling in cash segment with little quantity. On other side, they will build huge positions on bullish side in F&O future and options. So traders try to track this data to get FI's V1 markets, and also keep an eye on bond yields. Bond yields fall is positive, and I am again reminding you in Nifty charts, keep an eye when markets come closer to 19,600 mark. Even in option chain, 1.46 lakh contracts in call side are present, which is highest for any strike in this weekly expiry. Now let's talk about option chain range. Our range is 18,800 to 19,700. I have explained why I have taken this as Nifty range in news video number 36, which was done on 25th October. If you look at charts, this candle was formed on 25th October. This move towards upside had not taken place when I gave you the range of 18,800 to 19,700. The very next day, on 26th October, Nifty closed at 18,857 and went towards intraday low of 18,837, and I did not change the range. Now Nifty is present at 19,400 mark, so there is still space upside for markets to move towards our upper band of 19,700, and there is plenty of space downside as well. I know the range is quite big, but when markets are moving more than 100 points in single trading session means there is no way we can be safe by carrying short range. So this is the reason why I gave 19,700 in call side and 18,800 in put side, which is a 900 point range. Now let's talk about important stocks news update. First, let's discuss IRCTC numbers. Their net profit increased by 30%. Their revenue also increased by 23%. Their EBITDA increased by 20%. Their margin slightly declined and came at 36.8% versus 37.8% in previous year same quarter. Their net profit and revenue came above expectations. Their margin decline was due to higher revenue contribution from low margin segments like catering, state tirtha and tourism. Their high margin segment is internet ticketing. In IRCTC website, we will book tickets right. In this segment, they will receive high margins. The overall revenue contribution from this segment decreased to 32.8% from 37.1% last year. IRCTC is the only entity authorized by the Government of India to provide online railway tickets, catering food services to railways, and packaged drinking water at railway stations and in trains. It is a kind of monopoly they enjoy, but IRCTC has expanded their business business towards wide range of tourism and hospitality offerings like luxury trains, hotel bookings, and even holiday packages like Tirtha. So it looks like they are contributing to the numbers, and also they have declared an interim dividend of 2.5 rupees per share. There is an interesting data regarding China. You can look at this picture on screen, which shows foreign direct investments in China since 1998. Each bar indicates FDI investments in China. In first quarter of 2022, it reached record levels of $100 billion. But for the first time since last 25 years, FDI balance of payments data has declined by $11.8 billion. It suggests foreign companies may be taking their money out of China instead of reinvesting their profits. Is this positive for India? It is both positive and negative for India. The positive point is, if China is not looking attractive to FDIs, means they may consider India as a place to invest those funds, but it is not happening right now. If you look at negative point, in August 2023, US President Joe Biden issued an order to limit American investment in Chinese semiconductor and AI companies. This data alone could be the reason for decline in foreign direct investments. To counter this, China has banned chips made by US companies. But China is facing many economic problems. Their property sector is in crisis, and they are also keeping their interest rates lower for longer time, whereas it is completely opposite in rest of the world. Central banks across the world are raising interest rates and keeping those rates higher for longer. This can lead to semiconductor supply chain issues, which can severely impact different sectors in India which depend on semiconductors, mainly auto sector. But for now, there is no supply chain disruption threat from China. Now let's talk about SEBI, Securities and Exchange Board of India. In January this year, Indian stock markets implemented T+1 settlement, which means you can buy stocks for long-term holdings. It will come to your demat account within T+1 day, trading day plus 1 working day. It means it takes total 2 days. Earlier it was T+2 days. It would take total of 3 days. Same if you're selling the stocks in holdings. Only 2 countries in the world follow T+1 settlement. It is India and China. But now, according to reports, SEBI wants to move to T+0 settlement, which means the trade will be settled on the same day. You don't have to wait for another trading day. If SEBI implements it, India will become first country in the world to move towards T+0 settlement. The way in which SEBI wants to move to T+0 is through dual stream settlement cycle. Dual stream settlement cycle means investors could choose to settle on same day basis if they want to, or they can stick to the current T+1 model. They can choose whatever they want. This dual stream settlement is not being liked by FIs. FIs are saying it could lead to separate segments. For example, let's say retailers are choosing 0-day settlement and FIs are choosing T+1 settlement. This will lead to liquidity fragmentation. They are saying in NSE, 35% of daily trading volume is by retail investors, and foreign investors contribute around 15%. So FIs are saying it will create a liquidity problem if there is separate segments, and it can also create price discrepancy. And another problem is FIs won't pre-fund their trades, which means they will not give money before they receive their shares. If settlement is happening on same day, means it is also a problem for FIs because they want to fund their positions instantly. But it is positive for retail investors because retailer stocks are bought with full upfront margin. They would benefit from getting their funds quicker if they are selling, and they receive shares quicker if they are buying. SEBI is likely to issue a consultation paper on how markets can move to instantly settle stock transactions. They will ask opinions from participants and then it will be passed as a law. It is not an official news set. What is your view on this T+0 settlement? Try to provide in comments. So friends, this is today's news video. Thank you for watching the video. If you have any feedbacks, please do provide in the comment section. Please subscribe to our channel if you like the content.